My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let's say we just don't get a stimulus bill. What happens if Washington lets us down again and millions of people, especially in the hospitality industry, find themselves struggling to put food on the table? Does that mean we should use a day like today where the averages went up, Dow gained 122 points, S&P climbed 0.80%, NASDAQ advanced 0.50% to sell everything into strength? Not so fast. Like I say every night at the end of the show, there is always a bull market somewhere. And even without a stimulus package, we've got a whole bunch of them that should do just fine. As a matter of fact, there's a lot of breadth here. Well, first, there's a relentless bull market in housing. And there you can think Toll Brothers, D.R. Horton, Pulte, and Cramer fave Lennar. These companies are huge COVID winners. When you're stuck working from home, your housing priorities change. Who wants to live in a tiny apartment in the city to save time on your commute when you have no commute? This is the Zoom economy, people. You might as well move to the suburbs or the country where you can have more room. That's why the demand for homes is far outstripping the supply. I kept thinking that mortgage rates would inevitably rise because the economy is on the rebound, particularly the housing economy. But Fed Chief Jay Powell is a smart guy, and he just told you again and again, but most recently he's committed to keeping rates low for a long time, particularly if there is no stimulus. So you've got a real safety net here. As long as the home builders keep running, everything that goes into a house works too. So tools, buy Stanley Black & Decker, appliances, pick up some Whirlpool, furniture, that's Herman Miller for those Aeron desk chairs, or Wayfair for everything else. Cookware, well, that's obvious. You want Williams-Sonoma. And for all the other essentials, well, there's Costco, Lowe's, and Home Depot. I like every one of these. But your home isn't just the place where you live and work, right? In the age of COVID, it's also an entertainment center. Roku allows you to stream content from the web straight to your TV. And if you want a home theater, now that the real theaters are dying off, well, that's Best Buy. The second bull market is related to the first one. That's the remote work tech stocks. When we first went into lockdown, we didn't know what to expect. It was supposed to be temporary, right? A month or two of Zooming, and then we go back to normal. Turns out it's more complicated than that. There are all sorts of security issues when you connect to the office from home, so the whole cybersecurity cohort just keeps getting a boost. Now, my favorites are Zscaler, Cloudflare, and, of course, Palo Alto Networks. It's not just security, though. Before COVID, cloud-based software was a great way to boost your business, but now it's become essential. Can't use old-fashioned on-premises software when everybody's off the premise. So the cloud facilitators are getting more business than they ever imagined. Salesforce.com has seen a dramatic acceleration in orders, especially for the stuff that's part of the Work.com cloud, which shows companies and local governments how to reopen safely and efficiently. I think CEOs who try to reopen irresponsibly will ultimately find themselves in hot water because Salesforce has figured out the best way, really the best-in-class way, to pull this off. They don't want to be on the wrong side of angry, sick workers, or more importantly, their lawyers. This new vaccine, this vaccine angle that they're taking about how to do that right, oh, boy, they thought this stuff through. Those are really the obvious bull markets that work without stimulus. Now, let's go into something that's got a little less public exposure that isn't talked much on CNBC. Number one, under the radar bull market, last man standing restaurants. We need this stimulus package because so many terrific smaller restaurants simply can't stay alive with these social distancing rules and worry about the aerosol spray from your mouth. I know my restaurant couldn't. Their collapse is ongoing. And look, we need social distancing, but it would be nice if the federal government forked over some money to soften the blow. The flip side of all these smaller players going under is the remaining large chains can take over the whole industry. I love Wendy's. That stock's been a huge winner for us. I bet it keeps running. I'm not oblivious to the strong same-store sales we just saw from McDonald's, which gave us something that I never expected, a rare upside surprise pre-announcement from McDonald's. Now, some of that's the last man standing effect, and they do have great coffee, by the way, versus a diner. But some of it's the new series of delectable desserts. This is the Oreo McFlurry, okay? This reminds me of really good Dairy Queen. Some of it's because Mickey D's has roped in Travis Scott to promote the brand with insanely successful Travis Scott meal, which is really just a combination of other meals, just so you know. And then how about this? Spicy chicken McNuggets. You know, it's the first time since 1983 that they've changed something this year, and this is a very, very popular item. I keep waiting for McDonald's to embrace Beyond Meat. They've got a little deal from it, but I got to tell you, I mean, that thing is just going to keep going higher. You know what's really driving it? Walmart sells Beyond Meat. I see both those stocks moving inexorably higher. I think Yum Brands ultimately will benefit from the last man standing effect, but the stock's still asleep because the food's still not that great, frankly. Sorry. We have Domino's Pizza on the show tonight. That's been a huge winner, although some people seem bummed about rising costs when it reported today. I say, why don't we reserve judgment until we hear from the horse's mouth? Then there's the ever-present Chipotle Mexican Grill. I'm betting it's got much more room to run. I also think we're a couple quarters away from a substantial upward revision in the earnings estimate for Starbucks, which is still way off its highs and represents a great bargain, as I tell members of the ActionAlertsPlus.com club. The next quiet bull market, well, this is an odd one that no one's talking about, parts of apparel. Now, everyone knows that Lululemon's doing well, right? Nike, you don't need me for that. But you do need me maybe for these others, like Levi's. We had them on the other night. I thought Chip Bergh told a great story. Matthew Boss, the genius retail analyst at J.P. Morgan, has got this acronym called LAG, and that's L Brands, which I know has moved a lot, American Eagle Outfitters, what a chart, and Gap Stores. All mall-based COVID casualties that are either seeing an earnings snapback or breaking themselves up to unlock value. I love the sum of the parts stories like L Brands. They tend to creep up over time and then boom. Third, cars, particularly used cars. They may be the hottest under-the-radar bull market in our country right now. So think Group 1 Auto was shocked with an upside surprise the other day. Lithia Motors, I only know this because my daughter lived in Lithia. It's a town in Oregon. CarMax, okay, we all know that one. They come on TV a lot, so does AutoNation, and Carvana. I know they're all up substantially, but remember, we don't care where these stocks came from. We only care where they're going to, and they are going to used car heaven. Thanks to the pandemic, the whole country has turned against mass transit and carpooling. It's too risky. That's forcing a lot of people to buy cars, and it's cheaper to buy used. So all these used car plays are roaring. Hey, you know what? I also like the sophisticated car parts semiconductors like NXP, which just pre-announced a better than expected quarter, and Marvell, which is on later in the show. Fourth bull market, all right? It's not exciting. But you know what? Things don't have to be exciting. It's just they don't get talked about on TV because they're unexciting. It's packaging. And not just because there's a lot of Amazon, but because they're closing. The supply of packaging is going down. We got a fabulous bull market in linerboard, which my father used to sell, and cardboard, which translate into big gains for international paper, and to a lesser extent, the heavily indebted WestRock. Another boring one? Agriculture. So strong that I don't care whether you buy the seed and crop protection companies like Teva, which is the old spinoff of the Dow DuPont, or the equipment makers like Deere, which is just on fire, and Agco, which we've had on so many different times. These all work, people. Oh, and don't forget the formerly forlorn chemical companies, which have had some big moves. This morning, PPG pre-announced a better-than-expected quarter, and the stock jumped nearly 5%. I see it going higher. I think like Dow Chemical's doing well, too. When the chemicals are strong, you know what you want to own? You want to own the railroads. Well, who do you think ships this stuff? You think they ship it by truck? Let's make this real easy. Norfolk Southern just pre-announced. See the pattern here? Really good numbers. I bet Union Pacific, which we had on recently, has much more upside. Look, there are plenty of other bull markets out there that don't need any stimulus. Some of them are obvious. Some are off the beaten track. But as long as the pandemic's with us, I think they can all keep chugging higher. The bottom line, Main Street may indeed need a stimulus deal. But Wall Street can do just fine without one. And so can your portfolio, as long as you focus on the bull markets that don't need no stinking bailout.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.